Good day, guys. I hope you are well. I'm Aviwe, the second year trainee, and I'll be taking you the individuals tutorial. This tutorial was recorded in class, but yeah, for some reason the software, I don't know, like I think it stopped recording. That's the first thing. Stopped recording midway, but even when it was recording, like it froze a lot. Like the video on YouTube froze a lot, but the audio was fine. So yeah, based on that, I'm making a new recording of the whole tutorial essentially. Then I'll upload it on YouTube, and yeah, if you are hearing this, you are watching it on YouTube. And what else do I want to say? But yeah, this is the first tutorial on individuals, which was delivered in class, right, by Meno and Katlejo. But then yeah, when I did the recording, I don't know, yeah, the software, it seems like it requires a lot of hard drive space. So yeah, maybe that's what happened. Okay, cool. And like I always say, guys, well, we're gonna do this tutorial like we normally do it in class. And like I always say, you always wanna take like note of your marks and time, right? So that you do the question in time. Obviously, if it says 60 minutes, do it in 60 minutes, and when you run out of 60 minutes, you move on to the next question. Because if you stay there and continue with the same question, you're most probably wasting time, and you're most probably spending your time doing the hardest parts, well, for you in the question. The second your hand stops moving or stops writing in a test, then you should know you are in big trouble, because the whole purpose of a test is that as long as you're there, your hand should be moving, writing things which are relevant and which will earn you marks. And the moment you stop and you think for a while, then you should probably think about moving on to the next question, because it means you don't know any, you've run out of stuff to write for that question, But yeah, that's my 2 cents on that. So we are required, after you take note of your marks and your time, then you come and give yourself purpose by essentially determining or rating what you need to do. So in this case, we'll be calculating the normal tax due to or due by Dora for the year of assessment ended 28 Feb 2023. So for Dora's 2023 year of assessment, provide your reasons for amounts that do not have an effect. So we require reasons where there is no effect on a tax calculation. You can assume that Dora wants to always minimize the tax liability. Someone asked me, what does this mean? This statement right here, what it instructs you to do is, where the legislation allows, you should understate her income, the taxpayer's income. And where the legislation allows, you should overstate the expenditure, or essentially overstate the deductions. And by doing so, you would have essentially minimized her tax liability, because if the income is less and the deductions are overstated, that results in a lower taxable income. The lower taxable income, lower liability. You understand what I mean? So, for example, there are elective things that a taxpayer should elect for them to apply, like a scrapping allowance. Taxpayers to elect for a scrapping allowance to be applicable. So what this sentence means is, on those electives which essentially allow you to interpret or apply legislation in the favor of the taxpayer by minimizing the taxpayer's liability, you should do so. So that's what that means. Understate income and overstate expenditure. Okay, cool. So now you know how long you have, you know what you're supposed to do. Then it becomes easier as you're reading the question to highlight what's relevant from what's irrelevant. Okay, so we're told Explorer Enterprises Limited, a South African company, offers extreme adventure tours all over the world. Dora, the person we're dealing with, she's 43, we tell you there. Then you should know, okay, rebates, what I need to do, 6K A, 6K B, what I need to do, interest rate exemption, what you need to do. Is a senior executive of the company and was appointed 1 October 2022. Okay, maybe I should not just say what you need to do, I should actually tell you what to do. So at this point in time, the reason she's 43, for interest exemption, is 23,800 rands. For 6K pay, a little bit irrelevant here, because you just need to know the number of dependents. Did she pay? If yes, okay, dependents, and for how long. That's it. But for 6K B, since she's 43, right, and so she's not 65. And so you know, okay, now the only thing that will put her in category A, the 33.3% category, is disability. If she's disabled, or her child is disabled, or her spouse is disabled, then that's the 33.3%. But yeah, I think that's the only thing. So she's a senior executive of the company, which is Explorer Enterprises Limited, and was appointed on 1 October 2022. Very important when she was appointed, because that affects obviously your salary calculations and all those things. She did not earn any other income during the current year of assessment before being employed, so no income before being employed. So now you know what to do in terms of that date. Dora does not own any shares in Explorer Enterprises Limited. She received the following amounts and benefits as part of her package for the year ended 28 Feb 2023. So that's the information you want, because that's the year we are computing her normal tax due or payable for. Okay, so yeah, what we'll do is we'll read one sentence and discuss its tax implications, and then yeah, we'll do it that way. One note its tax implications, and then we move on to the next one. If we don't have to deal with it at that time, we'll discuss its tax implications, then skip on to the next one, and then when it's time to do that thing again, we'll just record in the scenario. Okay. So she got a cash salary of 25,000 rands for the first 3 months, her probation period, after which it was increased to 30,500 rands per month. So Dora worked from 1 October 2022, right? So that is what, 1 October, November, December, Jan, Feb. So that's 5 months, and then 3 of those were 25,000, and 5 of those. So let me just make a note for yourself when you are reading the scenario. But for us, we really don't need to do that. We just need to account now for the normal tax implications due to or payable by Dora for the 2023 year of assessment, right? Okay. So under her gross income, we know we have a salary. Okay, we have a salary. And guys, you should know by now, this is gross income. And remember, we said short reasons where there is no effect, there is an effect. You don't need to provide a reason why you're including it in gross income, because there's an effect. Okay, and then in terms of our calculation, it's 25,000 multiplied by 3 plus 30,500 rands multiplied by 2. She worked a total of 5 months. She worked a total of 5 months. 3 of those were 25,000 rands, and the other 2 were 30,500 rands per month. So easy peasy. You just jot that down in your scenario. So that's 25,000 times 3 plus 3,500 times 2. That should give you a salary of 100. But just not checked. Yeah, times 3,000. Yeah, 136,000 rands. Right, and then we go on to the second note. So we are told here. She was obliged to belong to the company's pension fund. Okay, Dora contributed. Now these words right here. Okay, go back to highlight mode. She contributed on the company's pension fund. So she made a contribution towards her retirement. Then you should know now, okay, that means I must have the remuneration column, which you see right here. The only time you need this column is when your taxpayer has made or was making contributions towards retirement. Other than that, you do not need it, and you'll be wasting time if you are doing it, you know. Okay, so now we know we need to calculate her remuneration, because we'll need it for the 11F contributions towards retirement deduction. So she contributed 8% of her cash salary, which we've already calculated, to this fund. Dora also belongs to a retirement annuity fund, so she has a RAF as well, of which her contributions amounted to 4,500 rands for the year, right? And during the 2022 year of assessment, 2000, so for 2022, 2,000 of her retirement annuity fund contributions was not deductible, so you also need to factor in that. So her contributions are 8% of her salary plus the 4,500 rands plus the 2,000 rands. And then in terms of a fringe benefit, there is none. Why? Because we don't tell you in the scenario that a company paid for your stuff. So we actually park this transaction right here. But maybe the only thing we might do in terms of this transaction, now we know that we should also calculate her remuneration. That much we know. What? Oh, just said to know. Okay, cool. And we know 8% of that is obviously contributions. Then yeah, always remember to show your computations, right? Okay. During 2,000 years. Okay, yeah, there is nothing else you can do with them. During the 2023 year of assessment, Dora received a total of 14,000 rands from a former husband for maintenance of their firstborn child. So this is maintenance. It's 14,000 rands. Dora and her former husband got divorced in 2009, and she remarried in 2012 to a current husband. So she is married, but we don't tell you there that is it in or out. So don't assume. No, you just know she's married. Okay, so easy there. You just say the maintenance. If that's gross income, remember that's a special inclusion, I believe, of how much? 14 grand, I believe. 14 grand. Okay, but then remember, this is also exempt income. Maintenance minus 14,000. Okay, that's cool. Oh, yeah. Let me just do this. Okay, cool. And yeah. Dora joined Explorer Enterprises Limited medical aid scheme. So medical aid scheme should trigger something. Now you are in the realm of 6Cap A and 6Cap B. Upon starting her employment, Dora, her second husband, and Dora, her second husband, and 3 minor children are dependents on the medical aid. So now you know you're dealing with 5 people on the medical aid. Prior to 1 October 2022, Dora and her 3 children were dependents on her husband's medical aid, so they're not here. Both Dora and Explorer Enterprises Limited contributed 2,000 rands per month. So both Dora and the company. So you should know that's a fringe benefit right there. To each the medical aid scheme, Dora incurred the following medical expenses during the 2023 year of assessment: 1,200 rands for first aid supplies such as bandages, cotton wool, and disinfectants, which she paid out of her own pocket. So she paid, but the bandages, cotton wool, and disinfectants, that's not prescribed medication because you don't need a doctor's prescription to buy those. So therefore, this would not qualify. As her 2 daughters are serious netball players, they are injured on a regular basis, which requires her to always have these items on hand. So yeah, that's fine. She paid, but she paid for non-prescription stuff, so it's not qualifying medical expenditure. She had an appendix operation during the year, which cost a total of 32,000 rands. So 32,000 for an operation. It was so services rendered. It was an emergency operation that was performed just in time. Unfortunately, the medical aid only covered 65%. So the other 35%, then that will be qualifying medical expenditure because she actually paid of the total cost, and she had to cover the rest, right? She paid because remember I also tell you, I think Dora incurred. Well, incurred is not enough. You have to actually pay for these things. So she actually paid. 3,000 rands worth of medication, painkillers prescribed. So these are prescribed by the doctor to help her recover from the operation, which the medical aid covered in full. However, the medical aid covered these in full, so that's not qualifying medical expenditure. Dora's father, who's 67 years of age, is a CASA and works at KDMC, an audit firm. He was so busy with work that he could not get the time to visit the doctor, so he asked Dora to buy his heart medication, prescribed medication. So it's prescribed medication. Dora paid $980 for it out of her own pocket. But remember, the only thing now, you only qualify for 6 A and 6 B if you paid for dependents. And in this case, his father is not a dependent to her or not dependent on her. Why? Because he works at KDMC and he's a CASA, so he's earning a lot of money, probably, and he can take care of himself. So he's not dependent on Dora for care and support. So that is not qualifying medical expenditure. So the only thing I can take out from this is that fringe benefit for now. And then when we're doing medical aid employee benefit, and that's 2,000 multiplied by 5 months because she worked for 5 months, and that will be 10,000 rands, right? But then this is remuneration, so you add that. I think one thing I forgot here is to remember this maintenance is not remuneration. The reason is remuneration is actually essentially amounts that flow from employer to employee as a result of an employment contract or employer-employee relationship. For this, she's not employed. She just received this from her former husband who's paying maintenance. So it's not remuneration. In case you're wondering. Okay, I don't know why. No, okay, cool. And then we quickly move on. Dora donated, so dealing with a donation, 2,000 rands to a public benefit organization, to a PBO, on 1st February 2023 within the year of assessment. The public benefit organization issued her with a Section 18 Cap A certificate. So this meets all our requirements, right? So therefore, but now we're still not yet there in terms of because we need certain totals to be in place first. So we park that thing. Dora made an assessed loss of 11,000 rands during the 2022 year of assessment, which was not ring-fenced. So assessed loss 11,000 rands during the 2022 year of assessment. Not ring-fenced means you can deduct it, but for second years I don't think you deal with the prohibition of deducting assessed losses. So but I think just to make sure, we always tell you that it's not ring-fenced, meaning you should deduct it, right? That's what we mean. We'll do that. Let's actually do that now because we're done. So start with our deductions. Assessed loss minus 11,000. Right, that's it right there. You do nothing else. Okay, and Explorer Enterprises withheld employees tax of 920 for the 20. So this is employees tax of 920 rands for the 2023 of assessment. But this is like I guess the last item we'll deal with. Okay, cool. So now we're in a position to just go back and say, okay, care salary of 25,000 rands for the HEPRO, after which we are done with this. There's nothing more we need to do. For this one, she was obliged to belong, okay, Dora also belongs to a retirement annuity fund, during the year, then we're not done with that. But we are done with this during the year of assessment because we've included it and exempted it in full. With this one, we're not done because this is where we need to also 6A and 6B after determining essentially Okay, yeah. So the very next thing now you need to do, because remember your last 3 items are capital gains tax, the first one of the 3. The second one you deal with retirement fund contribution deduction. The last one is you deal with the donation before you get your taxable income. So now there is no CGT, so meaning now we're in a perfect place to just jump in and do this one, number 2. So easy peasy. And what's beautiful here is you don't have you do not have CGT, so the taxable income after and before is the same. Okay. So we just need to taxable income before 11F. And then now we deal with 11F. First of all, we must ask ourselves, okay, let's just say retirement fund deduction. Okay, that's what we're doing. And then the first item is, whoa, what did I just do? Okay, I don't know what just happened to my PC. I hope it's still recording. Okay, it seems like we're fine. Okay, I don't know what happened there. Pressed too much, I guess. Total contributions. And we said the contributions are so I told during the she belongs to the company's pension fund and she contributed 8% of her cash salary to this fund. Also, so we first deal with that. So equal to she contributed 8% of that. So we multiply that by 8%. No, okay. I want this in brackets to show you. So that's 8% of that, right? And then we are told Dora also belongs to a retirement annuity fund and her contributions amounted to 4,500 rands. So right quickly you add there plus 4,500 rands. And then last one, we are told during 2022 22 year of assessment, she could not claim 2,000 of her retirement annuity fund contributions, so was not deductible. So not deductible means you can add them this year. So we quickly go and do that. Plus 2,000 rands, and then we say we'll limit this deduction of 17,300. Well, limit to lesser of. So we'll limit this deduction to the lesser of 350,000 rands. That's 1. And 2 is 27.5% of higher. Between 1, the remuneration, right, of 146,000 rands. So that's remuneration. And taxable income after CGT. Okay, I don't know why it's doing that. Because Excel. Okay, no, it's not because of Excel. It's Excel. It's because I made it do that. Okay, so ring fence these. So we must choose the higher between these two. Obviously, the higher between these two is the 146. So we just multiply that by 27.5%, right? So you say 27.5% of the higher between remuneration or taxable income after CGT. This amount is there, guys. It's legislated. It doesn't have a name. You just know the first one is 350,000 rands. Okay, and then last one is the taxable income before CGT, and the taxable income before CGT is the same as taxable income after CGT. So essentially, the lesser of the three is the 40,150 rands, but our contributions are only 17,380 rands. What that means is you can deduct the full amount because it is less than the limit. That's 11F, guys. Hopefully it's straightforward. What makes it hard is that there's something to know. You need to know the formula. You know, that's the only thing that makes it hard. But if you can just know and understand it, then it's easy. It's easy peasy in a question. You should look forward to these kind of things because this is relatively easy marks if you know what you're doing. So we are done with number 2 as well. That's all she wrote, yes. And then for number 4, we can't because it's after taxable income, right? So we come to number 5. Oh, we're done with you as well. Number 6, Dora made an assessed loss. We're done with that. So now we come to number 5. Dora donated 8,000 rands to a public benefit organization. Let's do with that. So we need another subtotal, but this one is a little bit different. Yeah, I don't know, Excel is weird. Let me just edit it. Yeah, we see what it's doing. I don't like that. Okay. So that's our taxable income before we deal with the donation. It's 117,000 rands, 620, but this is the same. This remains the same. And yes, we only had 2 things that needed remuneration, nothing else, and the assessed loss is not remuneration. It doesn't even affect it. So yeah, perfect. So that's the taxable income before now you do your last item for donations, which is section 18 cap A. Then for the donation, she donated how much? 8,000 rands. So she donated 8,000, but it's limited to 10% of TI, right, of taxable income. And our 10% of taxable income is, want a tithe of that, is 11,762 rands. Right, so the limit in this case does not apply, so we are free to deduct the 8,000 rands. Why? Because it's lesser than the limited amount. Then now after this amount, you should know we are ready to calculate your real taxable income, or your final taxable income, obviously for column 3, because the other columns ready now. And you want the sum of just these 2. And it's 109,620 rands. May make it pretty, maybe put it in a box or something. But yeah, that's it. That is it. Now you just come here. Okay, someone is requesting me, Mr. Onceya. I don't think I can pause. Let me pause the recording. No, it doesn't pause. No, I'll talk to him after. Okay, no guys, yeah, in the interest of the recording, I will talk to Mr. Onceya after. Yeah, because if I stop it will create 2 separate recordings, so I cannot do that. I just want one video. Okay, can I just quickly tell him busy, talk after. Just so he knows he's not being managed. Okay, sorry about that, guys. Okay, now you know you are in a position to essentially calculate your normal tax as per the tables, right? That's the only step. Well, not the only one, the next step. Normal tax as per tables, right? Okay, I don't want to do that. So we calculate it, and then we come first check our thing. So our taxable income is what? 109,620 rands, right? And that 109,680 rands is right here. So easy peasy, you just multiply by 18%, because remember 109 is less than 226, you know, if you're wondering why. And yeah, if you don't know how to use, you first ask yourself, what is your taxable income? In this case, your taxable income is 109,620 rands. Then you ask yourself, where does that number fall in this table? In this case, it falls here, so you just multiply by 18%. If we had a taxable income of 600,000, then it would fall here, right? And then you do this thing, you say 115,762 plus 36% of the difference between the 600,000 and the 488,700. Okay, this table seems weird. Oh no, it's the recent one. Okay. Yeah, no, I thought maybe this was last year's table. Okay, so easy peasy, right? 109,620 multiply by 18%. That's the calculation. Right, that's 19,732 rands. And then the next thing is you apply your rebates. In this case, our Dora is 40 something years old. She's 43, so she's not 65, therefore only entitled to a primary rebate of 16,425, right? Then she made contributions towards a medical aid, so she gets medical tax credit under section 6 cap A, and under this section her medical tax credit is because remember now we must know her things, her dependents. So spouse, that's a dependent, children are dependents, right? So she has those type of two. She doesn't have a family member who's dependent on her for care and support, and there's no other person who need to consider who's considered to be a dependent in terms of a medical aid fund. So her dependents are her husband and her 3 children, and plus remember we count the person as well, so it's 5 people on the scheme. Since it's 5 people for the scheme, the first 2 get 347, and then each additional member after that gets 234. So okay, wait. But then remember now you must guess with her, for how long has she been paying for this thing? And we are told here that prior to 1 October, Dora and her 3 children were dependents on her husband's medical aid. By this, we may essentially assume or presume that the husband was paying before 1 October. And from 1 October, since they transferred to Dora's medical aid, and we are told Dora was the one now making their contributions, 2,000 rands each, backed by, and the other 2,000 by the employer, right? So you know she was paying, but only from 1st October. So October, November, December, Jan, Feb, 5 months. So you multiply by 5 here, and that's your 6A tax credit. Easy peasy, that one. Uh, 347 times 2 for the taxpayer and the first dependent, plus 234 for each additional member after that, and we have 3 additional members, which are the children. Close that. And for how many months? For 5 months: October, November, December, Jan, Feb, right? For 5. But the only flaw is it must be a negative amount because it's a credit. And then we calculate 6B. Why 6B? 6B will always apply if you did 6A. That's first of all. Second of all is if the employee only incurred qualifying medical expenses, then you'd skip 6A, because 6A is for registered medical aid fund, but 6B is for excess in terms of the medical aid fund which could not be claimed, or qualifying medical expenses. So, but then we ask ourselves, okay, now we're doing 6B, that's cool, but under which category? First category, ask yourself, is Dora 65 years old? No, she's 43. Is Dora disabled? No. She just had an appendix operation, but she's not disabled. I don't know what an appendix is, but I don't think she's disabled. The husband, there's no information. Guys, don't invent stuff here and say, let's make the husband disabled. We told you, because you only know the first category formula. Don't do that, you're killing yourself. the husband is not disabled, and none of the 3 minor children are disabled. So now this means, okay, she's not 65, and herself, the husband, and none of the children are disabled. Then we go to the second category, the 25% method. Let's quickly do that. For both methods, you first determine the total contributions. Okay, this is what I wanted to do first there. Starting with this stuff, I wanted to make it here. Yeah, just to separate it from the rest of the thing. And also with these, I'll do the same as well, actually. So ask yourself, what are the total contributions? Okay, the total contributions, quite simple. Dora contributed 2,000 rands together with the employee, and they did this for 5 months. So that's 20,000 rands in contributions. Then you say from this, less is the second method, so less 4 times the 6 KPA tax credit. Less 4 times. If it was the other category, we'll say less 3 times. Or that, right? And then we say to ourselves, okay, this is equal to you multiply by 4. 18,620, and then we want sum of these two, and we call this the excess, because it says excess or excess contributions which could not be claimed under 6 KPA, which we can now claim under 6 KP. So that's the excess contributions. And then to this we say add your qualifying medical expenses. So add to your qualifying medical expenses. When we come back here, we are told that she incurred the following medical expenses. The 1.2 for bandages is not prescribed medical supplies, so therefore it doesn't qualify. The 32,000 rands for the operation does qualify, but only 35% thereof, because the other 65 was covered by the medical aid. So come here, say the qualifying medical expenditure is equal to 32,000 multiplied by 35, 65 less 100 gives you 35%. Right, so that's one we know. That's the first qualifying medical expense we know. Then we're told here 2,000 rands worth of medication, the painkillers to, I guess, post the operation, were covered in full by the medical aid, so not doesn't qualify as QME, qualifying medical expenses. Then also the last one, where she paid 980 for her father. Father is not dependent because he's working, meaning he's not dependent on Dora for care and support. Therefore, 0 there as well. So our only qualifying medical expense is this one. And then you may do for yourself, I guess, a mini total if you feel like it, of these two. That's 12,580 rands. Then you say for this one, less 7.5% of taxable income. Right, so you say equal to minus our taxable income times 7.5%, and then we say that equals, if this number was less than, if this was a negative number. First, let's start here. If there was no excess, meaning our excess was negative, for example, let's say our excess was, our excess was 23,000, giving you minus, you would limit this minus 3275 by 0, right? You'd limit it to 0 if it's negative. Right here, limited to 0 if it's less, if x is, if x is less than 0. Limit to 0 if the answer is less than 0. Same thing applies here. Limit to 0 if the answer is less than 0. Okay. But in this case, with a positive number, So we don't need to limit to 0. What you need to actually do is now just multiply it by 25%. So that's our credit. Our credit is this number times 25%, and that's 1090. Quickly come here. This number seems a bit off. I don't know if there's something I did wrong. So contributions is right. 4 times 6 cap A, yes, instead of 3, plus qualified medical expenses. A mini total there, and then minus that, and then 12,000 B41. No, yeah, B41 minus that gives us that, and then 25%. Yes, okay, that's our credit of minus 1090. And then in this case, I think it might dawn to you that, and this is why, guys, I please beg you to always calculate the normal tax for the year before you consider deducting your employee's tax, which the taxpayer paid. So our normal tax for the year is minus 2,438. So that's our normal tax for the year. It's minus 2,000. I want to copy this here. Okay, but it's gonna do that. Okay, change this to D. Change this to D. So right, it's minus 2,438. But this negative amount is because our rebate and our 6K pay and 6K B are more than the normal tax payable as per the table. When that happens, and remember we told you the tax credits and the rebates cannot create a refund. What that means is limit this amount to 0 when it's negative. Limit it to 0. So applies here. Limit to 0 if it's less than 0. Because it was minus 2438. So you just come here and do your employees tax, and that's what. Okay, we're done with you. 920 rands. And like I say, SARS is not in the business of giving you money that you didn't give them before. So, but remember, it's a negative amount because it's less employees tax and provisional tax. So the normal tax due to Dora. Why is it due to Dora? Because she's gonna be given a refund. Why is she getting a refund? Because she is not supposed to pay tax for the year. Her normal tax for the year is 0. She doesn't owe SARS anything, but she has already paid SARS in terms of employees tax 920 rands. So she must get the 920 rands back. So that's why the normal tax is due to Dora from SARS, and it's really okay. I forgot to do this. Really, man, come on. I wonder why it does that. Okay, doesn't matter. Equal to this amount. Okay, make it cute. Put it in some. And yeah, guys, that's the tutorial. That is the today's tutorial. Well, last week's tutorial, but I had to re-record it because yes, the recording let us down. Yeah, all the best, guys, and I hope this will be helpful to you, and we apologize for the poor quality of the first recording. I'll take it off now. I've actually never taken down a video of YouTube, which I'll do now. Yeah, this is it. I don't know, for some reason I'm not comfortable with this number, but that's the number I get to when I apply the text correctly. Yeah, all the best, guys. Enjoy your studying.